Welcome back here into Markets at Noon. We're talking about the earnings and the market, and let's talk about an earnings candidate. We have ThyroCare that reported its quarter earnings, and it is in focus. It's right now gaining in trade with gains of 2+%. But we also have the management, and we'll quickly look at the numbers first. As far as the net PAT is concerned, that is up 34% on a year-on-year basis. The revenue is also seeing an uptick of 24% at 240 crores on a year-on-year basis. The margins are seeing an expansion of 227 bips, and the EBITDA has also expanded to 33% on a year-on-year basis to 77 crores. So a good set coming in for ThyroCare, and on account of that, we do see that impact on the stock price. So that's trading with gains of 2%. But let's get Rahul Guha, who's the MD and CEO ThyroCare Technologies and MD and CEO API Holdings, joining us. Hi, good afternoon, Mr. Guha, and thank you so much for joining us on the show. Firstly, congratulations on a strong quarter. A 24% revenue growth with the pathology business that's grown 26% on a year-on-year basis. Do you see this momentum to sustain?
At this point in time, of course, Q1 has been a very, very strong quarter, and we're very encouraged by the continued franchise expansion. However, on Q2, we are still sitting on a very high base of last year. So I would like to see how Q2 pans out before I revise guidance for the full year. Right now, I'll maintain my high teen guidance that I had given at the end of Q4.
Mr. Guha, you've laid out a 3 to 5 target of achieving 15 to 20% revenue from specialty diagnostics. Can you help us size this opportunity in rupee terms, and what capex is still required beyond what's already gone into your Mumbai and Delhi center labs?
Just to clarify, I had not said 15% growth for the specialty segment. I had said 15% of the market, and my competitive peers, 15% of their revenue is specialty, and we hope to achieve 15% of ThyroCare's revenue in a 3 to 5 year time frame. Just to give you a sense, if the pathology market is roughly about 60,000 crores, if you take 20% of that, we are talking about a 12,000 crore specialty diagnostics market. So it's a huge market that we are looking at. And we hope to make specialty, which is quite expensive today and difficult to access, much more affordable and accessible to the common Indian patient. And if we are able to make it a success, I'm definitely sure 15 to 20% of ThyroCare's revenue coming from specialty in 3 years to 5 years is not a very ambitious goal.
Also, talk to us about the expanded laboratory network to 44 labs, 43 in India and 1 in Tanzania. Adding 3 new labs during the quarter, what is the lab expansion roadmap ahead?
See, we normally, right now, if you drop a pin anywhere in India, ThyroCare will be present within 150 to 250 kilometers. So there's actually no real need to expand labs at this point in time. Most of the lab expansion that we are doing is when we are almost 100% capacity utilization in one of our existing labs. Then we look at a nearby city to expand our lab so that we can provide better service in those markets. So I think in this year also, we will probably add 6 to 8 more labs. I don't think we'll add anything more than that.
Right. Mr. Guha, the realization per avail in the franchise business has grown 7%, which you've attributed to a mix shift towards the advanced tests. Yet the overall revenue per test actually declined 2% on a year-on-year basis. Could you help us reconcile these two numbers for our viewers?
Sure. See, our strategy, if you look at our fixed costs or our total costs, right, it is very much at a patient level. Right. Once you walk into a ThyroCare center, or once I send someone to your home to collect the blood, actually all the costs are more or less fixed at that level. So every test that you add on top of that actually gives us a lot more at the bottom line, because we only incur the additional cost of the reagent for an additional test. So our strategy has been to encourage patients to test more comprehensively and add more tests so that there is no doubt in their mind about their health. And so therefore, we have kept individual test prices low, but we are driving growth by increasing the number of tests per patient. And you would have seen in this quarter also, we have grown the number of tests per patient.
Right. Mr. Guha, on the radiology diagnostic business, you mentioned a partner search is underway with roughly 6 months timeline. Why the divestment? Can you also give us a sense of what's happening to the existing radiology centers in the interim?
So the radiology business has turned around dramatically from when we first took over. It was a heavily loss-making business. Last year, it would have done about 6 crores of PAT, and that momentum continues in this quarter as well. So there is no urgency or any compulsion for us to exit the radiology business. It's still generating profit. But if you look at the return on capital profile of our pathology business versus our radiology business, we are able to generate almost 34% return on capital on our pathology business, but it's substantially lower in our radiology business, right? So if I have 100 rupees to invest in ThyroCare, I would much rather invest that 100 rupees in pathology because I get a substantially higher return than if I invest that money into radiology, right? So keeping that in mind, we felt that our focus should be on pathology. And really, the pathology market is huge, and there's a lot of opportunity for us to grow and focus on that segment. And radiology, frankly speaking, has not generated the returns that our pathology business has returned. And so we felt a partner who is able to drive much better returns from radiology because they have MRI, CT, ultrasound, and all of that versus us who just have PET CT, right? It may be better placed with a partner who can drive better value creation and return on capital and allows us at ThyroCare to focus on the pathology segment.
Mr. Guha, can you give us a percentage return from radiology business as well?
Radiology, it will be roughly right now a single-digit return.
All right. Also talk to us about the West Asia that contributes 31% of the pathology revenue from just 9 labs. While your lab count is more evenly spread elsewhere, what contribution mix are you targeting from your geographies?
No, we are truly actually a true pan-India player with almost equal distribution over north, south, east, west, right? And we have no particular focus area as such. We actually focus more on going into tier 2, tier 3, tier 4 markets where pathology and good quality pathology has still not arrived in those markets. And our focus is to expand in tier 2, tier 3. We don't look at it as north, south, east, west. We just look at it as which markets where ThyroCare is not present and how can we open up our presence by expanding our franchisee network in those markets.
Right. Also, Mr. Guha, finally, with the API Holdings' own deleveraging journey ongoing and no IPO on the horizon, how should investors think about capital allocation at ThyroCare itself? Will we see more M&A or is the focus purely organic for now?
No, we even today, ThyroCare has a very robust cash balance even after paying the dividend, and we are generating substantial cash every quarter. We would love to do M&A. We have already in the last year done Think Health, Polo, Vinta, and we are always on the lookout for more M&A, but we will not overpay for deals. And so therefore, it takes us a lot of time to evaluate and decide and execute on the M&A side. But what I can tell you is we are always on the lookout for M&A.
All right. Thank you, Mr. Guha, so much for joining us and weighing in the numbers and, of course, the roadmap ahead for ThyroCare. We'll let you go on that note. And with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you more updates on the market. Stay tuned.